Homes are
Homes
going
are going unsold
and
and prices are dropping like crazy. I suppose some of you will say that the market is getting back to normalcy now. Homes are going unsold as home sales plunge by over 30 across the U.S. market. In concert in today's video, I'll discuss why home sales are plunging so drastically, whether or not a housing market crash is happening, and if so, what do we do about it? Sales of newly built homes have plummeted to pre-pandemic levels as inflation and mortgage rates rise. The sales numbers are far below what forecasters expected, prompting more recession fears. Mortgage rates are on the rise and they're not showing any signs of slowing down. Mortgage rates have now risen up above 5 for the first time in a long time, and home prices have also been rising. If you look at predictions of where mortgage rates may be, say 2 or 3 years from now, most people are looking at interest rates to 7.5%. Millions of Americans are priced out of buying a home, often competing with all cash offers well above asking prices, and rents are skyrocketing too, causing overall housing affordability to collapse at its fastest rate on record. According to Bloomberg, new home sales in the U.S. have dropped significantly. The enormous volume drop that they dated to April showed a severe plummeting of new sales, with only 591,000 homes having been sold in that period. This dropping in new home sales marks the heaviest drop in over 9 years for the statistics in the housing market. Diving deeper into the numbers, we see that there was an almost 17% drop in the number of new single-family homes purchased. The sub 600,000 figure fell well short of all estimates projected in a Bloomberg survey of economists, which had called for a 749,000 number for the homes to be sold. It was also the lowest since April of 2020, at the height of the pandemic. Just a look at the home sales graph shows you a very clear and very vivid picture of how significant a drop like this is in relation to prior periods. As you can see, by only having 591,000 homes sold, this is the lowest figure reached since 2020, but the free fall drop in volume is the heaviest experienced since 2013. That says a lot about the nature of the market today. People just aren't buying houses like they used to. The question then that formulates itself is, why are houses not being sold? Or better yet, why is the volume of purchased houses dropping? Let's dive deeper into this matter and find out. It's only logical to be curious as to the reason why home sales are dropping. Well, two immediate factors come to mind. Those are the high prices of homes and the steep climb in mortgage rates. And I mean, unless you've been living under a rock, you already know that those are the two primary factors. Now let's take a look at them individually and assess them in detail. According to information from CNBC sources, home prices have been on a steep increase, particularly since the year began. Home prices increased 19.8% in February year over year, according to the SP CoreLogic Case-Shiller National Home Price Index. That is up from the 19.1% annual increase in January and is the third highest reading in the index's 35-year history. Talk about high prices. Another factor to check out is the 10 City Composite Index. This is an index of home prices for 10 major metropolitan statistical areas in the United States. The index is published monthly by Standard & Poor's and uses the Case-Shiller method of a house price index using a modified version of the weighted repeat sales methodology. The 10 City Composite Index covers Boston, Chicago, Denver, Las Vegas, Los Angeles, Miami, New York, San Diego, San Francisco, and Washington, D.C. Looking at the figures, the 10-city composite annual increase came in at 18.6%, up from 17.3% in the previous month. The 20-city composite was up 20.2%, rising from 18.9%. Unsurprisingly, the Sun Belt cities continue to see the highest gains. Phoenix, Tampa, and Miami saw annual home price gains of 32.9%, 32.6%, and 29.7% respectively. All cities reported higher price increases in the year ending February 2022 versus the year ending in January 2022. Cities like Minneapolis, New York, and Washington, D.C. saw the smallest price gains, although they were still in the double digits. So that means even though those places didn't see the highest price increases, they still saw some significant increases in the cost of homes. In a normal environment where real estate operates as it should, it is unusual to say the least for housing prices to rise over 32% in a span of 2 years, and so the trend is causing some economists to start worrying about, well, a possible bubble. I'll touch on this bubble talk in a minute. For now, Now I want you to observe this chart that shows how fast prices have been climbing up, particularly in the last 18 months. The rise is simply astronomical and borderline unprecedented. This is why I believe that the rising home prices are one of the reasons why home purchases are slowing down. Decent homes are just too unaffordable for most Americans. The home prices themselves are enough to make anyone a little nervous, but coupled with rising interest rates, the story takes a whole different turn. You see, mortgage rates have risen to nearly 6% from a low of around 2.65. This chart that shows the mortgage rates for the past 90 days is a great indicator of just how dire the situation is. With interest rates approaching the 6% mark, this places home payments out of reach for most Americans when you consider that the houses are already expensive to begin with. Coupled with very high interest rates, you find those home payments are beyond the reach for most people due to the Fed raising interest rates, with more increases planned for the future. Home loans are now the priciest they've been since 2009, further eroding affordability in the housing market. Consider this, for example, for a median priced home financed with a 30-year loan, the monthly payment is $550 higher than a year ago, an increase of 46 according to calculations by Realtor.com. With the purchasing power of consumers lower than it ever was before, you can see the kind of impact such payments have on people's finances. Craig Lizard, managing director at SPG, said in a release the macroeconomic environment is evolving rapidly and may not support extraordinary home price growth for much longer. The post-COVID resumption of general economic activity has stoked inflation, and the Federal Reserve has begun to increase interest rates in response. We may soon begin to see the impact of increasing mortgage rates on home prices. Though mortgage rates began rising slowly at the start of this year, they didn't really take off sharply until March. Given that this reading is a 3-month running average through February, it doesn't show much of an impact from rates that could be coming next, though. Odetta Cushy, first American chief economist, told Insider affordability is a growing challenge as higher new home prices and rising mortgage rates are pricing out some buyers. Regarding the increasing prices, Ada said 1 year ago 25 of new home sales were priced below $300,000. In April of this year, only 10% of new home sales were priced below $300,000. Well, this sounds like a strong alarm bell for anyone trying to purchase a home right now. So prices will soften, so therefore you're going to make it more affordable, basically. So you're going to make up on the hike in mortgage rates. How about the dynamic though of people who have to sell their homes in order to buy another home? Why, if I have 3.5% or 3.25% now, the thought of paying 6% for a bigger house is really tough. That's where the market is really going to be pinched. So many people are locked into the home they're living in now by a 30-year 3.5% mortgage, so they're going to stay in that property forever. Maybe they will rent it out, but if they actually want to move up, they are going to have a hard time affording the next place. If you combine interest rates with what's happened to home prices over the past year, the mortgage payment for a median price home in the United States is up 43%. So buyers are saying I've had enough, and sellers are starting to freak out a little bit. It's hard to see a silver lining in a situation that seems so doom and gloom and is yet important for the vast majority of people in the nation. However, it is there in this case where home prices just rising indiscriminately with home purchasing increasing too, then that would be a problem. That is because it gives the outlook of a housing bubble where demand keeps increasing and home prices follow suit. However, what we're seeing now is a decrease in the number of homes being bought. This may mean that demand has hit a ceiling at its current price point. What this alludes to is that home prices will go down to garner more demand again, as houses just won't sit on the market unsold for the average citizen. This comes as welcome news, as this will put homes one step within reach of affordability. A TDS survey found that only 36 of this year's prospective home buyers believed now was a good time to buy. This comes as a steep decline from 59 in 2021 and 68 in 2020 who believed that those times were a good time to purchase a home. Pessimism and worry have truly crept into the market as speculations of a bubble worries buyers. However, as these home sales decrease, eventually we will see home prices lower, and this will put any negative speculations to rest. It looks like the housing market is slowing. Tell me, Glenn, in 6 months is the market going to be better or worse? Probably the same. Rates are probably going 6%. Inventory is increasing. Sales volume will be somewhat fine, but prices are going to soften as we move through the spring housing market. We are seeing clear signs of cooling demand. Many buyers are deciding to take a step back and reevaluate their budgets and timelines. Overall, there there are signs that reflect that there is a need for more homes, and even construction companies are still building, but at the current prices demand is waning in the current economic climate. I would say that is very well advised. Only time will tell if the market is safe from a housing crash or if one was already imminent. Regardless, I'll be right here in Business Basics to walk you through it all. You